Welcome to Tradecast, the podcast where we provide expert insights and share actionable tips and strategies to help you improve your trading skills. Join us as we navigate the complexities of the markets and uncover the secrets to successful trading. Hello everybody and welcome to the first episode of Tradecast. I am your co-host Callum and this is Darwood, who is also going to be co-hosting the show with me.
Yeah, I'm Darwood, but it's probably easier just to say Woody.
First things first, just thought I'd say a little bit about myself. I've been trading for about 3 years now, primarily swing trading, Forex, but also recently I've started trading a lower time frame strategy on the DAX and the NASDAQ via CFDs. So how about you, Darwood? How did you get into trading?
I've been trading in the Forex market since I was like 16. Nothing like too big. It was just trading 212. How pretty much we all start on like a 50k account and you make like 10k and you're like, oh, I'm going to quit school. But quickly realized that wasn't the case. And then, I don't know, it was mainly over lockdown. I picked it up. Like I said, main markets are the foreign exchange markets. And then I'm pretty much a swing trader in them. So it's Forex, some precious metals, some commodities just here and there. And previously I've dabbled in stuff like options trading, but it just required too much time. So it's something I couldn't continue further. So yeah, right now pretty much just Forex trading.
I think that's kind of like often the case with a lot of people, isn't it? Starting off on a demo account and then think, wow, it's so easy to make so much money, and then kind of realize when you actually put money onto the line, then it's a totally different story altogether, isn't it?
Yeah, like I remember I was in sixth form and like I had all my friends around me and I was like, listen guys, we can all quit sixth form. We don't need to go to uni, blah blah blah. And they were like, "What?" Got my phone out. They see 50k. They don't know it's real or not. I don't think they believed it was real. But I was like, look, I just press this button, and if it goes up, I'll make 10k. And I did that for like a solid month, thinking I was the big man. And then I blew about 10 different accounts on demo. But yeah, I think it is how most people start.
Mm-hmm.
It is because of the money and the fact that you just have to press a button and hope it goes in your favor. But yeah, like as soon as you put any real money in, even if you're risking like £10, you're like, oh my days, this can't happen.
Different ball game, isn't it?
Yeah, entirely.
I kind of remember I'd sort of like looked into trading a little bit, baby pips and the usual beginner basic stuff,
Yeah,
and I'd opened up a demo account with IG, and I knew what a head and shoulders pattern was, and there was a head and shoulders pattern on I think it was Tesla,
yeah.
and no word of a lie, it literally played out absolutely perfectly, like head, shoulders, retest to the neckline, and then just straight down. And I was literally thinking, I remember sitting there at that moment, I was going, this is it. Like, all I've got to do is just look for these patterns and I'm going to become rich. So,
No, I had a similar thing. Like I was literally sitting downstairs with my family, be it like, imagine I'm 17 years old and I'm like, listen, guys, I'm going to make 30k a month by the end of the month. And they're like, how are you going to do that? I'm like, I found this thing on my phone and yeah, 30k a month coming so easily. And they'd laugh at me and it genuinely annoy me because like, it's ridiculous how much you actually believe you can do that.
uh-huh.
I know trading's the only thing I've believed that. Like usually I'm very level headed, but like when it came to trading, I was like, oh my days, I can actually make a ridiculous amount of money here by doing pretty much no work, which is quite odd if you think about it, because there's nothing else. At least for me, there's nothing else which that's occurred to me ever.
Yeah, so true. Did you ever, by any chance, look into binary options? Because I remember first seeing, I think it was on an advert on YouTube, and you know how it's like when it closes above a certain level, you make this much. If it closes below a certain level, you make so much.
Yeah,
And,
yeah. Are you on about where it stays within a range?
yeah, pretty
Yeah,
much.
yeah.
And I remember seeing somebody on YouTube doing that, and I was literally thinking, I was just like, it's this easy to make money. Like,
Yeah, I remember like when I got into options because I had like a trading background, so I was like,
mhm.
to make money, I have to be right on my call of the markets, and I saw this thing in options that was like, what is it? It's called like an iron corridor or something,
Uh-huh.
and they show like a graph, and it's like if prices within this to this, you're making money, and I'm like, wow, that's so simple. And then I got into it, right? Like downloaded a whole options platform, got a whole options course, and like I was looking into it, and it was so complicated that I was just like, right, this is gonna take too much time.
Hmm. Crazy one, isn't it? So, how was your week or month been trading so far? Because I know I've had a lot of big events happen and a lot of news come out.
Yeah, I mean, it's just been, to be honest, a normal month for me. I think the highlight so far is GBP USD.
Hmm.
It's probably been my best trade of the year so far. It was just a weekly bias trade on an hourly entry, and people listening to this are going to be like, "How is this his best trade?" But it was like just over 6R on that one trade, which,
Nice, very
depending
nice.
on what background of trading you come from, that's either very bad for you or very good. But at least for me, it's one of my higher R trades. So yeah,
Hmm.
it's been a good month, to be fair.
Mate, I would take 6R any day, honestly. Happily take 6R any
Yeah.
day.
Listen, everyone's now dropped off the podcast. No one's listening after you said that. Well done.
But yeah, caught a nice trade on USD JPY today. Other than that,
Yeah.
it's been quite a quiet month for me. Few small losses, nothing major. So, what's your thoughts on what's going on with the banks at the minute?
Yeah, like we were talking about this earlier. Like we all saw in the news and in articles, how they were always on about this financial crisis is probably one of the biggest we've faced ever. I mean, I'm no expert in the economies or whatever, but when you see things like that and you look at stuff like the 2008 crash, and I was just looking around and I was like, I can't really see or feel the impact of it. Like it was odd because it was almost like everything was going normal, and then
Hmm.
all of a sudden it just hit. Like everything was going through the roof in terms of prices, and like yeah, I guess it was inevitable that something like this was going to happen, but you just didn't know who it was going to happen to.
I don't think we've even seen the worst of it yet either. Like, I don't even think the interest rate decisions this week are as high as they're going to go. I think they're going to keep hiking rates because inflation's still ridiculous. Like, you can see it even just going putting petrol in your car. I suppose petrols came down a bit, but going shopping, like weekly shops, like double what they were.
Yeah, I remember like before, like I guess everyone's saying this, but like before I used to go to the shop and you'd spend like £100, your kitchen and everything would pretty much be full. But now you go and like you spend £100 and all you've got is some toiletries.
Uh huh.
So like yeah, inflation is just through the roof. So yeah, I agree. I mean, like I said, we're not like professionals or anything, but you sort of just have to use your logic. And yeah, I agree. Like interest is just gonna rise and be on the up.
Yeah, literally. I don't think we've seen the worst of it. I think the worst's yet to come. Still yet to see a bottom, and then hopefully things will pick up and start rallying up again. I know it's always
Yeah,
easier to trade in a bull market, so
yeah. I mean, sort of like I always thought it would be easier to trade in like a trending market, but then this is for me again. Like if you look at some markets, like USD JPY, sometimes goes on a mental trend, and you
yeah.
just find that sometimes the trend is just so quick that like you don't actually get a chance to be on board. So like I struggle to find entries in a bull market,
Hmm.
just because it's moving so quickly. You just don't know where the best entry is. I think if you're more like investing long term, then obviously bull market's great for you. But I think as day traders, you almost want a sort of range. Again, it depends what strategy you trade. But you
Yeah,
almost want
definitely.
like some of my best trades come from like a range, or waiting for the range to be decisive. I remember crude. Crude is particularly bad for this, right? Crude is like one of my best markets. Is one of my favorite markets. If I could only trade one market, it would be crude, right?
Uh huh.
But like crude can be so sensitive at times. I remember last year I was looking through my trades, right, and there was a period of about 3 months where I kid you not, crude missed my orders by, I'm talking, ticks. Yeah, it missed like all of them. It missed by the smallest amount, and then it go on to go on some mental rally. I remember like when we were in lockdown, crude was doing a bit of a madness. I think it was just breaking outside of a range. I remember like pretty much calling the bottom. I had an order in at the bottom. Now, obviously, my target was just it was a conservative target, but like
Mm-hmm.
crude missed it by the smallest amount. Went so yeah. I often find in markets like that, at least for me, I'll get a lot of missed entries. Whereas when they're ranging, I just get a lot more activity in the market.
I personally don't think there's anything worse than when you miss an order just by like a few ticks and then it just totally it goes to exactly where you thought it was going to go.
Yeah,
I'd rather get the trade totally wrong and it just hit stop loss than that happen. I think that's actually more painful.
yeah, I agree. Because then you're just thinking, I could be up this much, and like,
Yeah,
it's painful to watch that
it
like
is.
it is going up because you knew you could have had it, but you don't have it.
Mm-hmm. Sometimes when that happens to me, I'm just like, right, I'm not looking at that market for a couple of days.
Yeah,
I don't want to know.
yeah,
So I think now would be a good time to introduce the guest who we've got on for the first episode, Sam Kavanagh. So basically, Sam is a mechanical price action trader who mainly focuses on foreign exchange markets and precious metals. He's been trading for about 6 years and runs a company called KB Trading, which is an education firm. And they've also had many trading desks across Glasgow. I think they've had 3 or 4.
yeah, bro. He changed office like every month, but yeah, pretty much like a soft background into Sam was, at least for me, Sam was like a mentor for me pretty much. I remember I joined KB Trading and I had like very, very little trading experience. And within a few months, my foundations were just built up. And I guess it was because I formed like quite a good friendship, not with just Sam, but everyone in the group.
Mm,
So yeah, he was, for me at least, he was a mentor. And a lot of my trading is inspired by him and Tom Dante. So
yeah.
he's a class guy. And he's also, he doesn't BS anyone. He's a very genuine person and he's very straightforward when it comes to trading, which I think in the trading space it lacks a lot of. This industry, there's a lot of people who are just trying to make quick money. But I guess that's also why me and Callum have decided to make this podcast because we're trying to pretty much bring genuine traders who've been in trading for a relatively decent amount of time and who know how to make money in trading and who have been successful in trading itself rather than bring in people who sort of aren't aware of the industry a whole lot and are just trying to get quick money. And I suppose what we want to do is just bring you genuine people.
Yeah, it isn't all Rolexes and Lamborghinis, kids. Just remember that.
I mean, there are some Rolexes. There are some Rolexes.
To be fair, I wouldn't mind a few Rolexes myself.
You don't have 7 on you right now?
Only 3.
Bro, you can't call yourself a trader, man. Hope you guys enjoy, and we'll catch you in 2 weeks on Monday.
Tradecast.
Thank you for coming on the show, Sam. So, first things first, what I wanted to ask is, how did you get started in trading?
Thank you very much for having me, Callum. It's a pleasure to be here. So basically, I got started in the markets in a relatively orthodox way, the same way most people kind of got started. I saw an advertisement for a brokerage online. It was Trading 212. And it's funny because you always see adverts for brokerages online, right, on YouTube and stuff like that. And you always say to yourself, who actually ever clicks onto that? Whoever gets into trading that way? Well, that's exactly how I got into trading. I saw an advertisement for a free $10,000 trading account with Trading 212. And so
Free.
I thought,
Sounds pretty good.
yeah, I thought, okay, that sounds good. So I thought I'd give it a bash. And, obviously it was a demo account. And really, I just started playing about with that. I was probably 15 years old, so we're talking 2015 here. I'm still in high school, sitting at lunch, playing, with Trading 212, trading stocks and that kind of thing. Had no idea what I was doing. But my mates sitting around me, they thought I was kind of pretending I knew what I was doing. And they seemed to really be interested in it. And it just kind of went from there. When I was in college, probably a couple of years later, doing architecture, I started to look a lot more seriously into trading. The interest was always there. Whilst I was running my first business, interest was still there and was still starting to look into it a lot more seriously. But yeah, that's how I got started.
So you mentioned that you ran a business. How come you didn't decide to go down the typical business route and decide to sort of steer away and go into trading instead?
Yeah, so effectively, whilst I was in college, I was also taking part in an action sport called airsoft. Airsoft's something that not many people knew what it was when I started back in like 2011. I was just starting high school and I started doing airsoft, going to these kind of Sunday skirmish type games, just having a laugh really. And effectively from there, what I done was I progressed up through the kind of ranks in that, started to take it a bit more seriously and moved to what was sort of a professional level. And yeah, I mean, from there, I saw issues that we had with communication. I decided to try and develop my own antenna system for the radios that we used. They were sort of like handheld walkie talkies type thing you could get on Amazon, but they had serious limitations. So, what I attempted to do was to build my own antenna using a tape measure. My dad worked in construction as I was growing up, so he had old tape measures lying around, cut one of them up, managed to create an antenna design for it very quickly. Other people wanted them, and the business kind of went from there. And I was doing that whilst I was in college, making some serious money at the time as well. For a kid in college, making a few £1,000s a month was a big deal. And yeah, effectively, I ended up getting pushed out of that market. A company in China ended up replicating my design and massively undercutting me. I was able to, put these out for like, I was selling them for 75 quid. This company in China was selling them for like £10. So eventually I got pushed out of that market. But luckily, my interest in trading and my seriousness in trading had already started to take precedence anyway. So it came about at a good time.
That kind of tends to be how it goes these days, isn't it?
Yeah.
So from trading 212, trading the free demo account and making vast amounts of money on it,
Yeah.
how have you like transitioned from where you were there to where you are now?
Yeah, well, I took the inevitable step that most people take, which was getting into signals. I had seen these guys on Instagram making ludicrous amounts of money, what it seemed like, living just a phenomenal lifestyle. I was a relatively, like most teenage boys are, I was, wanted to live a really high sort of lifestyle. I don't know when society began to move so aggressively in that direction. I think pop culture, celebrities, rappers, and all that kind of stuff. But I think it's a lot worse now, to be fair. Teenagers are a lot worse now. But certainly, when I was a teenager, most of my mates were just interested in playing football and that kind of thing. I wanted to have a fast car. I wanted to have this. I wanted to have that. I wanted to show off. And when I saw these young guys on Instagram pushing signals, I thought, jackpot, The way they marketed it was, oh yeah, we give you these for free because we keep some of what you make. That's how they kind of marketed it. And I thought, yeah, that seems reasonable. They give you out these trades, you trade them, they make a bit of money. Sounds good. And, I spent probably the best part of a year doing that, messing about with that, until there were some guys I had met through a Facebook group. I was taking signals from websites and that kind of thing as well. And then some guys I met through a Facebook group, we got into a chat. Some of them had started talking about different educators. And I started to pursue the route of swing trading education and done a few courses in swing trading. Started to think, maybe I've actually got things under wraps here. Certainly knew how the markets worked now. And I spent for a long, long time, I was spending every day studying the markets, testing things, studying different resources, even resources like baby pips, to build that foundational market knowledge. And then that pattern has continued all through my trading career. Even to this day, I'm still, I'm maybe not consuming paid courses now, but I am still going and looking at resources, still researching things, hearing what other people have to say. And that's a pattern that stuck with me throughout my whole trading journey, was just continually soaking in any resources I could get.
Sounds pretty similar to mine, to be fair. I think it was binary options is one I fell for. I was watching watching all these videos on YouTube, and it was people literally making like 75% in about 30 seconds.
Yeah.
And I was going, that looks so easy. They're literally just waiting for two lines to cross over. They're buying, and then that's it. I was literally thinking in my head, I was like, I could be a millionaire in a year's time.
Yeah. I mean, you hear someone talking about this EMA crossover strategy, and you put it on your chart and you look back, and historically you're like, this is the jackpot. Like every time that crosses, the market changes direction. And then when you try and trade it, it's just a completely different story.
It's like one of those hindsight sort of things, isn't it?
Yeah. Lagging.
Definitely. I understand you used to trade a lot more discretionary compared to now.
Yeah.
How come you kind of made the transition over from purely discretionary to more mechanical?
Yeah, so the first time I was ever introduced to the term discretionary trading was, I had already been trading a discretionary approach, but the first time I was really introduced to this concept was through Tom Dante. I remember a friend of mine, now this is probably, I don't know exactly when it was, but a friend of mine had sent me a video. An older guy who was on the team that I used to play for, the Airsoft team, he was a little bit into trading in his spare time, and he had found a video called Stop Moaning and Start Improving by Tom Dante's, probably one of his most watched videos, yeah. And I just really liked his attitude. I really liked his no nonsense kind of, everybody's looking for the holy grail and that kind of thing, but maybe you're just an idiot type of thing. And it just really resonated with me. I started to look at some of his stuff, and he was a discretionary swing trader. And what I realized, looking back, the type of trading I was doing was discretionary as well, confluence based trading systems. And to be completely honest, it's a fantastic ego massage. Like, it's great for your ego, it's great for your pride trading something like that, because you can look at a market and you can make calls about, yeah, I think the market is going to trade up to this level, and then it's going to pull back into support, and then it's going to go up and take out that double top and all that kind of thing. Sure, but when it comes to applying it consistently, discretionary systems, there is struggles there. There can be struggles there, and even though I've moved into being a much more mechanical trader now, those years of discretionary trading and analysis have benefited me massively, to the point where I can look at a market, and even though I trade mechanically, I can look at an entry that I've got or whatever, and I say, look, I need to take this because it's in line with my stats, but I'm already mentally prepared for the fact I think this isn't going to work, because I can see, I can see that in the market, and maybe 5 times out of 10 I'm right, 5 times out of 10 I'm wrong on that discretion. But ultimately, the reason I made that transition over was a very bad drawdown period in 2020. Now, when I say a very bad drawdown period, I think I was probably about 15% down or something like that on 2% risks. It's really, it's really nothing major, in all honesty. But at the time, I was trying to grow KB. I was trying to run a trading floor. We had taken on junior traders at this time. I was also studying order flow, which, if you're familiar with like Axia futures and that kind of thing, I was in the process of studying lower time frame order flow in European bond markets. So I was in the office every day from maybe 6:30, quarter to 7, probably wasn't leaving for about 12 hours. I would go to the gym, I'd get home, I'd get to spend literally minutes with Neve, and then, I was straight to bed, back up the next day for the same thing. And my mental health was really taking a beating. I was very sort of snowed under with work, getting into the office, having to look after this team of young guys, trying to train them. And at the same time, I'm having a drawdown period. And I remember in 2020, I wasn't trading that large. I wasn't trading like crazy large size or anything like that. But November 2020, I had a 5.5 grand losing month. And that had been my worst losing month up until that point. I had managed to keep things pretty good up until that point. And that just really, really sucked. And then coming into 2021, I really had a slog digging myself out of that drawdown because of the discretionary stuff. And you would look at a setup and you'd say, it looks good, but is it actually good? And then you would take it and then it wouldn't work. And you go, I knew that didn't look good. And I thought, hang on a second here. I'm gathering all these statistics on the patterns that I trade. I'm gathering all this data on the patterns I trade, but I'm not actually implementing it in the same manner. So I'll go and test every occurrence of this pattern that happens and gather the data on it. And then when it comes to actually trading it, I pick and choose which ones I want to trade based on how they look. And so when I looked at the data, I saw if I was trading them all with no discretion, I would be making money, and it would eliminate that factor of beating yourself up if it did or if it didn't work and all the regret and all that kind of stuff. And so over the course of that year, I began to move into mechanical trading. And a lot of it was brought about through one of our traders at KB, whose name is Grant. Me and him actually worked together on the price action concepts course, which is like our sort of professional level education. But he was one of our senior traders at the time, and he was applying that very mechanical approach. And so me and him kind of got our heads together, and we spent a lot of time on that. And that was really my transition into statistical based trading systems.
So did you find, when you were trading a discretionary strategy, did you find like actually backtesting that was way more difficult than mechanical edge?
What I found is that your discretion in backtesting somehow was just phenomenal. And then when it came to live, your discretion a lot of the time wouldn't add up. So in a year in backtesting, I'd be making like 150R.
Yeah.
And then when it came to real trading, I would make a fraction of that. So there was a massive disparity between what I would make in backtesting and what I was actually realizing in the live markets.
Yeah, I mean, I kind of went down a similar path. I followed Tom Dante for a while as well, and I had the same sort of problems.
Yeah.
Like, it's exactly the same sort of thing. Like, I'd see a head and shoulders pattern, backtest it, be like, wow, this is going to make me loads of money. And then when it comes to actually live trading it, the results didn't sort of transfer over.
Yeah, I mean, me and Tom still have a laugh about this to this day. Like, I'll send him a message and I'll say, "Look, I'm long euro yen here," and he'll say, "Mate, there's no way that's going to go up. That's going to absolutely collapse." And I'm like, "I know it looks like that, but I have the statistics here. I need to trade this systematically, and it'll tank from there and it'll stop me out." And he's like, "Look, mate, that's why I can't trade systematic." But then, a day later, the opposite will happen where he thinks market's going to go one way. I'm completely neutral on it. I'm just trading in line with my statistical edge and what I think works out and what he's looking at doesn't. So we always have this back and forth. We have a bit of a laugh about it because for him, trading a mechanical system as his kind of bread and butter, he would just never do it. I mean, he's so against it.
So with you trading like a more mechanical approach now, is totally automating what you do not something that you've thought about? Or is it something that you're trying to do? Or
Yeah, I mean, automating what we do seems like a logical next step. And don't get me wrong, technically it is. I have explored that avenue a number of times. I've had, different developers and that kind of thing approach me with ideas to help me automate my trading and that kind of thing. But ultimately, the conclusion I've come to is that although my strategy is pretty much mechanical, there is still elements of discretion that cause it to perform well across multiple market conditions. Our targets, for example, in the way I trade, they are relatively discretionary because it's based on swing points. So if you just had a static target of, let's say, 1 times ATR or 1 times the range of the pattern that you're trading or something like that, what that does is it eliminates that little bit of discretion and it makes your strategy more likely to stop working in certain conditions. So what you find is that these little bits of discretion that you add in, as small as they may be, they actually allow the strategy to perform over various market conditions. So ultimately, I'm sure there is something that I could put into code and that I could get automated. But is it a priority for me at the minute? No. The way I trade already takes up so little time in my day that I'd be happy to just continue doing as I'm doing for just now.
Yeah, I don't know about you, but with me personally, like I actually love being sat in front of the screens.
Yeah.
I know some people say they don't, but me personally, like sitting in front of the screens and just watching the markets, absolutely love it.
Give it 5 more years.
5 more years.
Yeah.
So, do you know when, say, if you want to develop a new strategy
Yeah.
and you want to gather statistics, what sort of statistics would you look to gather before putting it into a strategy?
Yeah, I mean, first of all, you've got the super obvious statistics from the actual validity of the pattern. So that would be like, what's the probability of a winning trade? What's the probability of that pattern traveling 1 times its own range? How frequently does the pattern appear? It's all good and well having something that has a 90% probability of working, but if it only appears once every 8 months, it's obviously not going to be something that's a tenable long-term solution for making consistent returns from the markets. So I'd want to see how frequent it is. So how many occurrences do I get in each of the assets I trade? I'd want to see how often it continues in the positive direction, how often it achieves 1 times its range, 2 times its range. Those would be the kind of the main things to begin with. And then from there, once you add something that looks like it's going to work, it would then be a matter of trying to formulate entry, stop, and target around that. And then from there, you would go down the road of looking at maximum adverse excursion, maximum favorable excursion. Those are 2 key metrics. If you know how far on average does a trade go against you before it turns in your favor, and how far does a trade go in your favor before it turns against you, using those 2 metrics, you can work out pretty well, first of all, if your entries and stops are good, using the maximum adverse excursion. Are you entering too late? Are you entering too early? Are your stops too wide? If your maximum adverse excursion is, let's say, 5% on average, you know that your stops are far too big. Either that or your entries are far too conservative, and effectively you could be missing entries. And then if you look at your maximum favorable excursion and you see that quite regularly the market goes 60% to target, but your average gain is only, maybe 30% of what your planned gain is, then you can see that potentially your targets are just a little bit too far away. So those are 2 pretty cool metrics to track, would be MAE and MFE.
Uh-huh. I'm just curious, have you ever sort of tried to factor in some sort of filter which you could trade certain market conditions in certain ways, or is it just trade like one way throughout all types of market conditions?
Yeah, I mean, so when applying filters, we obviously have to be pretty careful, especially if we want something that's mechanical and robust. Typically, what you'll find is the more filters you add to a trading strategy, the more you will curve fit that strategy. So, begin to over optimize the strategy for the time period that you've tested it over. If you test a strategy over a 12-month time period and you make, I don't know, 30R with a 50% strike rate, and you apply a handful of filters and you now make 60R with a 70% strike rate. Okay, your strike rate's gone up, your overall return has gone up, but now what you've done is you've optimized that strategy for that sample. If you go and test that on another sample of data from, let's say, 3 years prior, the likelihood of it working in those conditions is far, far less. And the likelihood of it working in future is far, far less. So ultimately, when I do a back test, I'm looking for something that is very average. I want something with an average strike rate that makes an average R per trade and has an average frequency. And what that means is, okay, it's not a killer strategy, but because it's so average and broad and has so little filters added into it, it's likely to work both in past, present, and future. And the way you would do that is test your strategy on a few recent years, get it to where you want it to be, and then test it on the 3 years prior and see how it performs. And if it performs well on those 3 years prior, you could even go back another three and see if it performs there as well. That's a good indication that you have a robust strategy. Contrasted against having a strategy, optimizing it for recent years, and then trying to test it on prior years and it not performing.
So just on that point there, because I saw a recent tweet that you put out about relevant amount of data in terms of strategy, like building a strategy. What would you say is like the optimum amount of data to gather to build like a robust strategy?
So it really does depend. What I like to have for my daily strategies is I like to have between 180 to 200 trades in a year. I'll get on my D1 strategy across the 15 assets I trade. I like to have at least 5 years of data with 150 to 200 trades per year. So that's going to give me over 1,000 samples, and that's a pretty good indication to me that that strategy performs. Now, on the lower time frame strategy that I'm developing at the minute, it's only on one asset, but I'll still get 180 trades in a year. So I would also want to test that over 5 years. I would say for looking at a strategy and determining if it's viable, you probably want no less than 500 trades and in no less than 4 or 5 years. So if you get 300 trades in a year, that doesn't necessarily indicate the strategy is going to work, in 5 years' time. I want to see a decent sample size, but also spread out across a decent time sample as well. And what that's just going to tell me is that, well, the market's risk on, it's risk off, based on interest rates and what the macroeconomic situation is. Your strategy is effectively applicable to a large variety of changes in the macroeconomic landscape.
Mm-hmm. So on that point of, you said you were developing a lower time frame strategy.
Yeah.
Would you go about doing that the same way that you would with the higher time frame? Or would you use like different software or just Excel spreadsheet and TradingView bar replay?
Yes. So at the moment, I'm playing about with the Forex Tester 5 platform. The guys at Forex Tester 5 actually gave me, I mean, I've already had it from the past. I just don't really use it. But they emailed me and gave me, they renewed the license or whatever, so I can have a play about with it again. They've asked me to do an honest review of it for YouTube. But I'm experimenting, playing with that at the minute. I would still always use Excel and TradingView. And then when I've got something that I'm happy with, I might use a simulation software like that to just play about with it, see if I can actually produce the results, the same kind of results that I'm getting in backtesting.
Yeah. So just out of curiosity, I'm aware that you trade like all the Forex major pairs, few metals.
Yeah.
Why do you trade them assets? And what do you factor in when you're wanting to pick new assets to trade?
Yeah, so it's a relatively new phenomenon to be able to trade minor pairs and to be able to trade crosses and stuff like that with good spread and low charges. Historically, you go back even a few years to trade something like Euro New Zealand or Aussie Yen, you found that the spreads typically were not very good, and the commissions, the round trip commissions were pretty shocking as well. So typically, any trader that's been in the markets for a while tends to gravitate towards the majors, because if you're transacting on a regular basis and you have a strategy that makes a decent amount of money in the euro dollar but also makes a decent amount of money in Euro New Zealand, if euro dollar your spread is 10% of the size of Euro New Zealand and your charges are half, already you're developing an edge there in just the cost of transacting, and people overlook that. That's a sort of a novice or a beginner trader approach. They wouldn't see that there's edge in having lower spreads, there's edge in having lower charges. If you can save yourself, it could be the equivalent of 5 or 6 hour, could be the equivalent of 10 hour over a year in spreads and commissions. So that was the thinking when I initially chose these assets. However, as time has went on and brokers and prop firms and that kind of thing are offering miners and crosses and those kind of assets with smaller spreads and cheaper costs, it makes sense to incorporate them and have a little bit of variety in my trading arsenal, as it were. You'll find there are times where the dollar's not doing much and your dollar majors are doing almost nothing. And then your yen pairs, they might be moving whilst the dollar pairs are not doing much, and vice versa. So having variety there is definitely important.
So when you're going over your trade journal, would you ever remove a pair if it wasn't performing, or would you leave it in?
I would never remove a pair that wasn't performing over, a sample size. And I'll tell you why, because I actually believe that's curve fitting.
Yeah.
So I can show, for example, you may have seen this, I have a couple of threads about this on Twitter, but I had one of my daily strategies I tested from 2016 to 2019. And over that time period, there were let's say 5 assets that made almost no money. Some of them lost money, some of them broke even, some of them made a little bit. But I removed those 5 assets. And what I found was over that sample size, I went from making 149R to still making 149R, but I had cut out let's say 50 trades over that sample size. So I drastically reduced my number of trades, but I'm still making the same amount of money. So I thought, jackpot, right? This is way more efficient. And then I went on with my 10 assets that I had left and tested 2019, 20, and 21. And I found that the strategy was almost break even, which was odd. So I thought, that's strange. So I went back and tested 2019, 20, and 21 on those 5 assets that I had excluded from the previous 3-year sample and found that they actually made money. They made maybe 30R or something like that. So what I then done was I got all of the data for those 5 assets over the 6 years and put it onto a spreadsheet, put it onto an equity curve. And what I found was right at the point I removed the assets, they pretty much went on a 30R winning streak. And the other assets that I had, which had done really well, went into a break-even period. And so I came to the realization that removing those assets was curve fitting my edge. So for that reason, I've been scared out of removing assets. I've got assets I've tested and they work, and I'll continue to use them.
I suppose that just shows the importance of tracking all this and gathering statistics, journaling and backtesting, doesn't it?
Yeah.
I think a lot of new traders don't journal and they don't realize the importance of it.
Yeah.
I mean, I noticed a massive difference in my trade when I started tracking my trades.
Yeah, absolutely.
How important would you say trade journal is for new traders?
It's essential. It's a bit like an example I would give you is imagine if you were lost in a forest, right? And you're trying to find your way out. Now, you can wander around, you can just wander round and round until you find your way out, hoping that you'll find your way out. Or you could be methodical about it. You could lay down a piece of paper or something like that, or, make a sketch on the ground. And you could start plotting out reference points where things are, where you've already been, and just explore the area around yourself and progressively work your way out, come back to that map, plot on something else. Yep, I've checked out this area, there's nothing there. And you could do that until you've built up a picture of the area around you. Now you have all these reference points to go from. You say, well, look, I already went down that road and it didn't work. There was nothing down there. I couldn't find anything down there. Went down that road and I found, a water source, went down that road and found X, Y, and Z. Now, that sort of illustration, what I'm illustrating there is your trading journey, because you're looking at blank charts, right? Full of candlesticks. And you're trying to plot out the territory. You're trying to work out where you're going. You're trying to try different things. And through a journaling process, you can map out the territory around you. You can see what you've done and didn't work. You can see what you've done and did work. And then you can start to do, as Tom Dante quite frequently says, do more of what works and less of what doesn't. If you know categorically on paper in front of you, I've tried this and it works, I've tried this and it doesn't, you're already halfway there.
Suppose that's the boring side of trading that nobody actually wants to do, isn't it? No one wants
Yeah.
to put in the work, but everyone wants the results.
Yeah, I mean, ultimately, you just have to learn to love it. Like, if you can actually enjoy back testing, ultimately, if you don't have a goal, you're never going to enjoy something, right? You're never going to enjoy it if you don't have a goal. It's a little bit like building a wall. You know, if you're just there putting a brick down, put some mortar down, put a brick down, put some mortar down, and you're just doing that all day, that can become tedious. But if you have that end goal in sight of the house that you're building or the museum, whatever it is, if you have that end goal in sight, you learn to love it because slowly, piece by piece, you start to see it coming together. Or, you know, a better analogy might be a jigsaw. You know, if you know what the end result should look like, each piece that goes in, you're actually enjoying the process. You're enjoying hunting out for that next piece that's going to fit here and fit there. And the reason most people don't enjoy what we might call the boring side of trading is because they don't have the end result in sight. And if you can get your eyes on the prize, not to be, you know, not to be flinging cliches out, but if you can get your eyes on that end goal, it makes all that process of getting there way, way, way more enjoyable.
It kind of boils down to what you were saying before about modern society. Everyone's got unrealistic expectations. Everybody just kind of wants to reap the benefits without putting in the work. It's just like everything. Like, you wouldn't become a doctor without having to do 7+ years of training. You wouldn't become a lawyer without having to go to law school, whatever. But similar sort of thing, isn't it?
Yeah, exactly. I mean, last year, the group, you know, we obviously have a Discord and we share trades and analysis and that kind of thing. And last year wasn't a great year for the group. But when I say it wasn't a great year, I mean, it wasn't like we didn't knock out the park, but we still made something like 36%. Now, I done an overview at the end of the year. I track a journal of like 100K just to show, because 100K, you can get a 100K account for a few £100s, few $100, you know, through a prop firm. And at the end of the year, you would have made, you know, let's say 36 grand. After profit splits, that kind of thing, you're maybe down 24, 25K. Now, ultimately, you look at that and you think, well, you know, is that a lot? No, but at the same time, one, you're probably going to have more than 100K. And two, 24 grand is the average salary in the UK for someone coming out of uni, the average starting salary. So you've studied the markets for a year, maybe 2 years, and you're already making the money just off of a 100K account that your average person is going to make coming out of uni after potentially 5, 6, 7 years. And ultimately, let's say you've made 36%. If you can get your hands on a little bit more capital, that 36% isn't a set dollar or pound value. If you're trading £1,000,000, it's 360K. So if you can keep that performance up and just scale your capital or obtain more, you're going to be absolutely flying.
I think it's just because people obviously see on Twitter, I'm not going to name any names, but people are making like, sending a screenshot of a trading view chart, making like 50 to 1 or in one trade.
Yeah.
But yeah, it's definitely what it boils down to. I just wanted to ask a few questions before you go about your company, KB.
Yep.
What inspired you to actually start your own trading firm and education firm? And what are some of the biggest challenges that you've faced when starting it?
That's a deep question. I mean, ultimately, what inspired me, there's part of me that I still have with me that's a bit of a know-it-all. There's part of me that, like, you know, people always say things like, you know, well, if you could trade and you had the secrets, you would never share them with anyone. And it's like, I can categorically tell you that's nonsense. I mean, whenever I've learned something, I almost get more gratification out of telling people that I know it than I do actually putting it into practice. And so there was an element of me that was like that. You know, I wanted to show people what I could do, but ultimately I do really, really enjoy teaching. You'll be aware, anyone who knows KB, that we do lecture in universities and stuff like that in Scotland. Universities invite us in to lecture their finance students and that kind of thing, and we don't get paid to do that. We don't really expect to get clients out of that either, because most of them are in uni and don't have a lot of, you know, disposable income. But I really enjoy teaching people, and that kind of feeds into what some of the challenges have been. In the early years, that bit me quite badly. You know, myself and Callum, we started KB probably 2018, end of 2018. And when we were teaching people, I had a real passion for teaching. I taught a lot of people for free. I gave away a lot of stuff for free, education and that kind of thing. And ultimately, we had groups of guys come in and learn and be your best mate. And, you know, you're on Zoom with them for hours a day, every day, teaching them and that kind of thing. And then they would turn around and leave and go and start their own thing and try and steal people out of your community and all that. So there's been challenges like that. But then there's also been drama, people having drama with you on whether it be YouTube or Instagram or that kind of thing. Other educators, you know, obviously we have run multiple trading floors. Some of the difficulties there are people coming interviewing for the job, passing the interview with flying colours, turning up on the trading floor and just being idiots, turning up late for work, and then you having to fire people who are like, you know, you've become best mates with them, you're spending 12 hours a day with them every day for 6 months, know them better than half your childhood friends, and then you have to get rid of them. You know, there's that kind of stuff sucks. And ultimately, when money's on the line, people can show their true colors. I've seen a lot of that happen. But also, when money's on the line and you're doing such a high stress, high pressure skill like trading, you really, friendships and stuff like that, especially with other traders, they can be really put to the test at times. And as dramatic as it sounds, there can be a lot of heartbreak in that as well. A lot of relationships can break down, and you can really see the worst in people. Let's just put it that way. But that's been some of the challenges. Ultimately, no good business, no solid company, and it's just the same with trading. You know, it doesn't come without blood, sweat, and tears, effectively.
Definitely. So, do you know when you were starting KB and you started the trading floors?
Yeah.
When you were interviewing traders and trying to sort of like assemble a team together, what qualities would you look for in people?
So, determination, you know, people who are willing to persevere, people who are humble. You know, if someone who comes in and says, yep, I know everything, yep, like, you know, I can tell you this, I can tell you that, look at this, look at that, they're going to be very unteachable. Someone who comes in and says, look, I don't really have much to offer, but I'm willing to learn, I like that a lot better. I mean, interestingly enough, some of the people who have done best through our junior trader programs, obviously, that we ran on the trading floor, we've had people who are law graduates, we've had people who studied chemical engineering in university, we've had all sorts of university educated people join the trading floor. And some of the guys who have done best have come from manual labor backgrounds. You know, Tim, many people who follow KB will know who Tim is. Tim was a bricklayer. He had been trading for a month. When he joined the trading floor, I just decided to give him a chance. And he moved up from England, you know, within a month, packed up his life down there, moved up from England, and he lives in Glasgow till this day. He has multiple funded accounts and he's still just plugging away at it. You know, the guy's literally been trading for a year and a half and he's already at a phenomenal standard. So you look for qualities in people more than I look for performance, in all honesty.
Yeah, see if they're a team player, etc., and stuff like that.
Yeah, absolutely. You know, I remember speaking to Tom when we were doing this interview process, and he said, mate, what you need to do is the ones who come in and they're bragging about how much they know about trading and, you know, they're always on the charts and all that. He said, just ask them, you know, like, okay, so what markets do you watch? And they say, yeah, you know, I trade gold and that kind of thing. And you go, right, okay. So what was the close price of gold yesterday? And you just watch their face go blank.
Catch them off guard.
Yeah, so Dante kind of primed me on this, and so I started doing it. You know, you'd get you'd get someone who'd come in, and that's exactly what happened. You know, they'd go, listen, I spend all of my life on the charts. I look at the chart of the euro dollar. I look at it all day, every day. I'm sitting there for 6 hours every day. Blah 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 blah. It's all I trade. And you go, right, okay. So what price is it trading at just now? And they're like, 1.5, and you're like, Yeah, only a few hundred pips out, mate. But
That would
so
have been a priceless video, honestly.
yeah, so it's always a good laugh. So we did do a little bit of that, incorporated a bit of that, and very quickly you'd find out who was telling the truth and who wasn't, and occasionally you get someone to go, yeah, cable's trading at 120 roughly. You're like, yeah, fair play, fair
Fair
play.
play, actually knew what it was.
Yeah.
So, like new traders in general who are like wanting to go down the prop route or say into like an energy firm or a bank or some sort of trading floor, how would you say that they could better position themselves to secure a job or like break into the industry?
Yes. So at the moment, it depends on what kind of avenue they want to go down. If you want to work at like an investment bank, let's say you want to work for Barclays or some large trading house, ultimately those guys are going to be looking at your CV. They're going to want to see qualifications and economics and that kind of thing. To work on a trading floor, like KB, what we would be looking for is potential in people who have done our education. So we've had people trade at KB who had studied economics and finance at university for years versus people who had come through KB's online trading education. And we wouldn't discriminate. We weren't looking at people's reams of qualifications ultimately, but it depends on what kind of standard they want to work at. If they want to work for one of the big name firms, you're going to need university education in relevant topics. If you're just looking to work for a firm that also teaches, most firms that have trading floors, they have kind of a program that you can go through, a course that you can go through to get qualified to trade on their floor.
I think it's great. I think it's absolutely great that you have done that because I don't think there's enough companies who are just sort of willing to take a punt on people and willing to give people a chance. Last topic I would like to discuss, because it's something I'm not very knowledgeable about myself, is crypto. And I know you're quite heavily invested in crypto. Why is that? Why crypto and why not stocks or bonds or?
Heavily invested is probably a bit of an understatement. I've got probably about 70% of my net worth in crypto.
Ah,
Now,
crikey.
why is a question I ask myself every day. Basically, I was always very, very against crypto. I thought it was a load of nonsense, just like most people did who've come from traditional finance. And it was only when a trader joined our trading floor back in 2020, I believe, or maybe it was 2021. And he was obsessed with crypto and he was talking about all these huge gains on all these different coins and all that kind of stuff. And I decided, he gave me a primer on it all and convinced me it was the future of finance. And, well, he convinced me. And so I'd started buying into crypto, started buying all through the bull run. And I was buying like retracements in the bull run and ended up tens of thousands of pounds into crypto at this point. And then the top happened at the end of 2021. And from there, it just absolutely started to collapse. And so it collapsed, and I thought, wow, it's collapsed 30% here. I'm going to buy a ton more and I put in some big size. And now you've got multiple tens of thousands in the crypto market. And then it would collapse another 30%. I'm thinking, right, surely it's going to stop at some point. So start buying in and buying in more and more and more until it got to the point where I had so much money in, and my average price on all these projects was pretty poor because I'd been buying through the bull run. And so when we began to really collapse and it looked like it was all over, I thought, well, now's my opportunity to pull down those average prices by putting more in and leveraging up these positions effectively, scaling into them, bringing down that average price. And effectively, as we come into the next bull run, I'm going to be sitting pretty. And I was happy to take that risk. I was happy to say, okay, I'm really going to bet big on this. I've got a steady income coming in each month, so I can afford to do this. Ultimately, I'm still relatively young. Myself and my wife, Neve, we don't have a child yet. Our expenses aren't crazy either. We've got a car and a house. That's about it. Or, well, We have 2 cars and a house, but I thought I can afford to do this. I can afford to be wrong on this. I'm only 23. Ultimately, if all goes wrong, it's not the end of the world. It'd be different. I can't afford to take this risk when I'm 35 and I've got 2 kids. Yeah, I just won't be able to. So I thought, if I'm going to take this risk, it's going to be now. And that's exactly what I done. And now, a lot of my crypto is above break even now. A lot of the cryptos that I'm in, and I'm just sitting tight looking for that next bull run. I mean, a conservative estimate, if things play out the way I'm looking for them to play out, it'll be a 7-figure profit anyway. And my slightly more optimistic targets will be into the 8 figures in the next bull run.
I mean, overall, I don't actually have any money in crypto, but I am bullish on it in the long term. How come you never decided to invest in stocks or bonds, or do you?
Not exciting enough.
Nah, need the thrill.
Yeah, exactly. I like my net worth fluctuating by 20% every few days.
Yeah, some people take heroin, some people just invest all their money in crypto.
Yeah, exactly. Whatever it takes to get that rush.
Yeah, exactly. I think that's a good point to wrap up on. Thank you very, very much for coming on. Really appreciate it.
Yeah, it's been a pleasure.
And if listeners would like to find you, where can they find you?
You can find me on Instagram. It's just my name, at Samuel Kavanagh. You'll probably, if you follow me, you'll probably get messaged by a load of fake accounts or followed by a load of fake accounts. So I don't ever message first or anything like that, or follow. On Twitter, it's Sam_KB_. And on YouTube, if you just type in Sam KB, I'll come up. But, on that note, I don't offer investments or contact anyone on any forms of social media unless you directly message me first. So just be on the lookout for those fake accounts.
Cheers, Sam. Thank you.
Cheers. Bye-bye.